Welcome to Real Estate Live, where your questions get answered. We get to the point with hot topics that everyone is talking about 3 times a week. We go live at 9 a.m. Pacific time on Monday, Wednesday, and Friday on YouTube and Facebook. I'm your host, Andrew Finney with King Realty Group in beautiful Las Vegas, Nevada. Today's hot topic is about how mortgage forbearance works. To tell us more about mortgage forbearance is Bill Marin with New American Funding. He'll also give us the mortgage rates trend and the mortgage market updates today. After the hot topic, we'll jump right into the Q&A session. Joining us today is our special guest, Harrah Brown from Atlanta Fine Homes in Atlanta, Georgia. To ask a question, please use the chat box on the right-hand side of your screen or down below if you're on mobile. If we miss your question, please try again or simply post your comment to the question section. I'm going to go ahead and get Bill Marin on the screen along with Harrah. Bear with us in a moment, and thank you again for joining in if you're just now tuning in. So let's get Bill and Harrah on screen. Okay, so I see them, but where did they go?
There we are.
There's Bill.
Good
All right,
morning.
Bill. Let's see if we get Miss Harrah. There she is. Thank you. Thank you. Good morning. Thank you for joining us.
Thank you for having
Good
me.
morning, guys.
All right, fantastic. So, Bill, do you want to go ahead and jump into the mortgage rate updates before we get into the hot topic about mortgage forbearance, please?
Yeah, so mortgage rates open up today a little bit flat, not much movement at all, which is a good thing. We're looking to see that kind of calm down. So the rates right now are still very good. Yesterday was still locking VA interest rate reduction loans below 3% with no points. FHA rates are still very good when you have a good credit score. You know, above 620, above 640, you're gonna get some really good rates in the FHA range as well. Conventional still down in the mid to low threes. Again, depending on credit score. So really, really good rates right now. Again, like Andrew, you and I've talked, that can change at any moment. I mean, the rates are swinging pretty big there for a while, but it seems like it's calming down a little bit and it's been a little bit more consistent. So yeah, it's kind of where rates are. Guidelines, as you know, we're seeing changes, and we're doing meetings almost on a daily basis to kind of talk about changes that we're hearing that other mortgage companies are having, and changes that we are not making, but also changes and things that we're tightening up on our end as well. Because as you know, we're a mortgage lender, we're a mortgage banker. We service our own loans. 90+% of our own loans we service. So there's some interesting things we can do that some others can't. But those guidelines are changing constantly, as you and I've talked about. So.
Right. And I know that's something that we're tracking 3 times a week. And I know you join us on the Monday and Wednesday session to give us those updates. You mentioned to me about an hour ago that you're going to have to jump off at 9:30 actually for one of those new update meetings and everything. So we certainly appreciate you keeping up on all of that activity and coming back in real time to let us know what's going on. Now, mortgage forbearance is a hot topic right now. I was reading something, and I can put it on the screen. Let me go ahead and do that so everyone can see what I'm talking about here. It was, I want to say, there it is. It was in Forbes. And Forbes was saying about how many people already, according to the Mortgage Bankers Association, have been applying for mortgage forbearance. And it was some pretty high numbers. Yeah. We're looking at, forbearance requests jumping 1,270% between March 2nd and March 16th alone, and another 1,896% between March 16th and March 30th. So in total, they say those are obviously, you hear thousands and percentages into the thousands. You're like, oh my God, that's huge. But overall, as a fraction of the market, it counted for roughly 2.66% of the total mortgages out there that had applied for mortgage relief or what is being called mortgage forbearance. So I thought this article by Ali Yale on Forbes was a pretty good article that tied down exactly what's happening. So why don't we go ahead and get into exactly starting with what is mortgage forbearance, and then let's go from there.
Yeah, so it's the hottest topic right now when it comes to real estate and mortgage, specifically in my world. And we've been told that from a servicing perspective, we've got thousands of calls that people have been calling in, like literally thousands of people calling in. And the most common thing that they're hearing that we are being told is people are calling in and saying, hey, how can I skip 3 payments? They're just assuming that you can skip 3 payments. That's what forbearance is, because some things have been put out there through the news and different outlets and just different kind of common things you think of. And that's just so far from the truth, man. It's just not the case when it comes to forbearance. It's not that. It's going to have to be paid back sometime. People think that you can automatically just throw it onto the back of the loan, but we haven't actually seen that yet be very common. What we're hearing and what we're seeing is some mortgage lenders will require, you can skip 3 months, not skip, but you can miss 3 months of payments, and they're going to put you in a forbearance program. Well, at that 90 days, they're saying that some of these companies are actually saying you got to, pay that full 3 months in full. So think about it. If you got a $2,000 a month mortgage payment, you can use those 3 months to get ahead. But if you're just going back to work in a couple of months, you got $6,000 that you owe for those 3 missed payments plus your next mortgage payment that's due. That could get people in a pretty tight spot, man. So, please, if people have, if you got questions about that stuff, please reach out. But the other thing is different talk about having it make sense, because there's got to be some type of help out there for these people that truly do need it, not just the people trying to take advantage of the situation, but where we've heard talk from our company about what they're looking to do, potentially with spreading it out over maybe a longer term. Again, I don't know yet; it hasn't been set in stone, but we're hearing that might be something they're willing to do. Spread it out over, maybe 6 months, maybe a year, maybe longer. I personally hope they make it longer for the individuals that actually prove that they actually do have a hardship. But I would recommend that anybody, if you're truly in a hardship, man, we get it. We understand. If you're in that hardship and you are not able to make your payment, or maybe you, maybe you're just in a tight spot, or the layoff is coming, reach out to your loan servicer, reach out to your mortgage lender, and find out, hey, what are my options, and truly what is going to happen. Don't just get all fired up. Sweet, I get to miss 3 payments. But no, pick up the phone, call them. You might be on hold for an hour. You might be on hold for 2 hours. You may not get an answer for a week, or more. But start the process, start the communication, and really truly find out what all of your options are. Now, for the people that are out there that are, not in that tight of a spot, right? They're still getting paid. Maybe they're furloughed, still getting paid. Maybe they're not furloughed. Maybe they have a position to where they're still working, like Andrew, like you and I. Thank God we are, right? Thank God we are. If people are in that spot and they're able to keep making payments, you might want to look into a refinance, because we're helping a lot of people right now because the rates are so good. If it makes sense for their situation to refinance your loan, skip 1 to 2 mortgage payments, and drop their payment, on average $300 a month right now. It's crazy. So that's something to definitely look into. And if anybody on this call is interested in finding out more about that, you can pick up the phone, give me a call. You can go to my website. I know Andrew's going to have it there in the description, to where you can complete the application just to find out what your options are, because it's an opportunity to save a bunch of money every month, but also maybe give you some relief for like at least a month without having to make a mortgage payment, and doing it the way that you're not going to have any issues with potential foreclosure.
So, and I appreciate those updates about mortgage forbearance. So essentially, if you were to define mortgage forbearance, what would that be? Like, in a very simple, easy to understand.
Mortgage forbearance is for when people actually there's an issue, you're not able to make your payment. You're going to temporarily be able to not make those payments, but you will have to pay it back. Every lender is going to be different. So essentially a program that you work it out with the lender that have a temporary hold, a pause, if you will, on the mortgage payments that are going to be due back at a set interval to be defined when the lending guidelines change in this case. And you kept mentioning the number 3. So when we're talking about how mortgage forbearance works, you mentioned a couple of different things a moment ago that are really important to dial in on, in my humble opinion. One of them being that you have to prove the hardship, and one that you have to be able to show why you need the forbearance with a lender to begin with. Yeah. That was one point. The second thing that you kept mentioning was the number 3. So when we mentioned the number 3, I love prime numbers. For anyone out there that wonders, I love 3, 7. Prime numbers are kind of my thing. But anyways, 3, and I'm thinking, what if somebody needs mortgage forbearance for 6 months, 12 months? How is that going to work? And is that something that's going to be a loan modification of sorts that might be coming down range in conjunction with the mortgage forbearance? So these are things that come to my real estate brain when we're having these conversations and we're going live. And, these are the questions that I get asked by people here in Vegas and people that write me and message me on YouTube. Yeah. And that's a good question, Andrew. I mean, we're not far enough into the situation yet to really understand exactly what those are going to mean. I know FHA HUD, put out some information maybe a week or two ago about being able to skip six payments, and if you still need help, maybe being able to go farther up to a year. Again, we haven't seen what's actually happening with that, but that is something that is potentially available. So, sorry. It's not
okay, so that's
no. Go out. Four kids, man.
so the fun, the joys of working at the home office and having 4 boys, right? Because I hear. That's so adorable, though. I to everybody that doesn't really know Bill as well as I do, Bill and I are good friends, but he has 4 awesome boys, a wonderful family, and he's working at home, obviously, with the COVID situation, #stay-home movement here. And it's been fun when we've been talking. He's still working really hard, locking loans and originated loans and stuff, but it's just fun. And I know Harrah and I were talking. She's like, Andrew, I have a 197-pound Great Dane. What happens if he barks and we're live? I was like, you can mute. But speaking of that, why don't we go ahead and get into the Q&A session? I see some comments coming up, so let me get the mortgage forbearance lower third there off, and let me go ahead and take a look at what we have coming in today. I'm super excited for everyone that's joining us. Pug Love in April. My goodness, Pug Love in April. You're always the first comment out. I got to tell you, I think that I just am in love with you at this point because you're so supportive and always here on the videos and stuff. So Pug Love in April, just to give you a quick heads up, tonight at 5:30 p.m. Pacific time is the series premiere of the Hernandez Family Home Buying Reality Show, and I'm super excited to share that. And again, it's 5:30 p.m. Pacific. It'll be set to premiere, so I'll actually be watching it with everybody and engaging with everybody that's watching it at the same time. So I'm pretty excited about that, and thank you again for the support and being here. Jaji, thank you so much for being here. Jaji says Chase's new minimum credit score for a new mortgage is 700, and down payments must be at least 20%.
Yep. Yeah, I'm not surprised at all about that, Andrew. Give me 1 second, guys. It's about to get loud in here. I got to shut my door. Sorry.
It's okay. So, that is really interesting. And I actually pulled up a screen on that as well, just to give everyone some context. Because, Jaji, this may have been the article that you read. I think you and I are tracking the same right here from CNBC. Says right there, JP Morgan Chase to raise mortgage borrowing standards as the economic outlook darkens. This was posted on Saturday, April 11th, and it was updated on this past Monday, so just a couple of days ago. Yeah. And then the highlights right here, right there to your point, Jaji, talks about the 700 credit score and down payment of 20%. So what is the scoop that you're getting on that bill, and what can you tell us about it?
I'm not surprised. I mean, for anybody that really has followed that and followed mortgages and who has guidelines and who requires what, Chase has always been one of the most conservative lenders out there. They just have been. They're very, very conservative. I'm shocked that more people didn't realize that, but it's like one of the biggest things everybody's posting online. It just goes to show there's a big difference between a mortgage banker and an actual mortgage depository, right? They have a lot of other assets, a lot of other things they have to watch and be careful of, and all those different things. And they have reason that they're so conservative in different areas because they don't do just mortgages. They do a lot of other stuff as well. So, I mean, Chase is not the only one. Wells Fargo completely shut off doing all jumbo loans altogether. Jumbo loans, Andrew, as you know, is loan amounts over 510, 400. Wells Fargo is the biggest player in that game, and they totally just tapped out because they're just very conservative. Does that mean that everybody's going to go to 20% down, 700 minimum FICO? Absolutely not. That just means your big banks are going to have problems. A lot of your big banks probably will increase it to something similar to that, maybe even higher, but they are very conservative. So if anybody out there is in contract and your loan officer was Chase, was somebody that worked for Chase, great company, you might want to get a second opinion, because that is a pretty tough guideline, and that is not by any means the trend that all mortgage lenders are going to follow. That's very, very conservative. So.
And I'm glad that you brought that up, because Jaji was saying, hey, is Chase the oddball here? And it kind of sounds like they may not be the only oddball out there, but the oddballs out there are, it sounds like from what you're sharing with me, probably some of the more conservative, larger banks that are out there. Because I know that you had shared with us a couple of weeks ago when we were talking about lending guideline changes, that New American Funding, which is more of a larger regional, I think, 30 different states New American operates in and growing. more than that now. So yeah, it's constantly growing to all 50 states. And that said, though, you were sharing that you guys could still do approvals down to 620 in a lot of cases.
Yeah.
And, you still had a lot of programs, including some down payment assistance and home as possible type loans that are still available. And I think that's why we were talking about it 2 weeks ago, because there was a lot of misinformation saying, hey, no more first-time home buyer loans, no more down payment assistance. And we're like, no, that's just not the case, guys and gals. We got to get the facts. And that's why I'm so glad that you joined us in on this.
In all fairness, that could be true for a particular realtor that has a lender that doesn't allow it anymore. That could be true for specific mortgage lenders. Absolutely. Like no more DPA with them. But as a consumer, you got to look at some different options, because if somebody's telling you no to things like that, you need to really truly like do some research and reach out to your realtor partner and say, hey, do you know anybody else that is or your real estate agent that's helping you buy the house? Reach out to them and say, hey, do you know any other lenders that might have some other options? Because odds are if they're a good real estate agent, they're going to know someone. And if they're not, hopefully they're on a team and they can reach out, or maybe reach out to the sales manager and find out, because there is other options for sure. I mean, it's not, down payment assistance is not gone by any means.
I think that goes back to the wisdom of when applying for a mortgage and you're early on in the process and you're identifying the team that you want to work with you to buy your house. It's not a bad idea. In fact, in a lot of cases, it's a prudent idea to maybe talk to at least 2 or 3 different lenders and ask them, hey, what kind of loan programs do you offer? And if you were me, what type of loan program would you recommend? What would you do essentially, right? If you were me in today's situation. And put the onus back on them in that regard. And if one of them tells them no, and one of them tells them yes, and a second person, let's say now third person, says they also have the program, then we're able to identify which lenders have said programs or not. So Bill, thank you for that. Megorium, I see you, Megorium. And yes, my friend, it has been a long time no see. I've still been here every single week with videos. I don't know where you've been, just saying. Megorium bought our house like last year, and she's like, hey, yeah, so, whatever. Right. So Megorium, I'm giving you a hard time, my friend. I really appreciate you, and thank you for joining us. She did say she's been watching the Real Estate, the Untold Stories, and that's what, for everyone's reference, that's what I named the home buying and home seller reality show. So thank you for watching the home seller reality show. Tune in for the next, essentially the second season of Real Estate Stories, Real Estate, the Untold Stories this evening with the home buying family. It's going to be a lot of fun. Did some different things, changed it up a little bit. I was obviously constantly learning and growing there. So let's get in. Biju, thank you again, my friend, for joining us. It's great to have you again. And this one, Harrah, I want to bring you in on. This is going to be also coming in for, hang on, I don't know where it went. All the comments came in. Ooh, come on, comments, work with me. Thank you so much for doing that. It's always fun, right? The comments there was more coming in and it was feeding it down to the bottom. So Megorium says, with the stimulus checks hitting, it's meant to be used for your house payment and bills. We're saving ours for just in case. Now, I have some different thoughts on the sum of that money and probably what it's really about. But before I get into that, Harrah, could you give us a point of view from how it's affecting your Atlanta market or what you're hearing on the streets over there in Georgia?
Well, thank you. And it's a pleasure to be here with both of you this morning. So thank you for having me. Our market here is still pretty strong. We see a little bit decline in our pendings, but we are still, new listings are consistent. And so and our listings are still getting quite a few showings, believe it or not. So what we are seeing are the houses that are priced right, believe it or not, they're selling in a day or two. And what we are doing is using precautions for both buyers and sellers and agents to keep everyone safe. And so while our market is still strong, the pendings have slowed down a little bit, but like I said, they are still consistent, which is really exciting. So we're just doing everything we can, just like everybody else.
Fantastic. So with regards to the stimulus check, though, what are you hearing in the Atlanta market from people you may come into contact with, and what is that word that you're hearing?
Well, from what I have heard from other people, just your everyday person, is that it's just for whatever they need it for. For many people, it's groceries, whether it's groceries, or paying a bill, paying a mortgage. But it's from what I'm hearing, it's pretty much for everyday purposes. And that $1,200 is going to go pretty quick.
Yeah, and if they're married, they can get up to $2,400, and then it was also based upon how much money that you earn, and then they kept reducing it the more income that you earn, either as an individual or a married person. So I think you're absolutely right, and that's essentially what, if you look at the sum of the money, depending on what one's mortgage is, it may or may not cover the mortgage. If we're being honest, at $1,200 or $2,400, if you buy a $500,000 house, a lot of those mortgages are going to, depending on your down payment, a lot of those mortgages are going to be over $2,000, depending on the rate that they got. So at the end of the day, I think that it's more about consumer goods, and I think it's more about trying to make sure people have food and they have the ability to cover their utilities. But if in Megorium's case, she's able to use it towards her house payment, I think that's smart. The best thing that she's saying right there in advice, in my opinion, is they're saving theirs for a just-in-case purpose. And Megorium, I think that is an extremely brilliant tactic, my friend, and I think that you should do that for those that are going to be able to receive those stimulus checks. Save it for a rainy day, save it as an emergency fund, and make sure that we're good to go and we have it available in case it comes up. So, Harrah, I really appreciate your insight. Megorium, appreciate you bringing it up. Ben Provost, good morning, Ben, and thank you for joining us again. It's great to have you. Ben says, I have a new construction build closing on June 2nd. I talked to my loan originator, and she said that they're not doing 60-day locks right now due to market volatility. Have you seen this before? Bill?
Yeah, so I'm not surprised. There's a lot of lenders out there that are not doing that. 60-day locks, because typically, so what you're looking at there, if you do a longer lock period, the longer your lock period is, the higher your rate is. I mean, there shouldn't be a massive difference, but yeah, there is some lenders out there that are not doing 60-day locks. So yeah, I mean, it is something that's kind of common right now. I'm not sure why they would be doing that, especially with new construction. You'd think that they would want to secure that. I would continue to reach out to them, on a daily basis, at least 2 to 3 times a week to find out when that pricing for a 60-day lock becomes available. Because it's it's important if you qualify with a 60-day lock, because that rate, again, every lender is going to be different, but say a 30-day lock on that rate might be whatever. If you have doing a conventional loan, 20% down, 5% down, whatever, with great credit, say your rate is 3.75, and that's on a 30-day lock. A 60-day lock might take you from 3.8 to 4.1. It could be that big of a difference in swing, and they just may not want to do that because they may not want you to refinance out of that in 6 months, so there's a lot of that kind of going on with that situation. So I really don't know the answer specifically to that, other than just stay in constant communication, see when they do have it available. Definitely when you're within 30 days of locking, 30 days of closing, make sure that you're able to lock that loan, because that's when it can get kind of scary, because you don't have much time to pivot and move once you're within.
And I do find that interesting. And like you said, some of the lenders are doing that. In this case, Ben let us know that the lender was part of the builder. For the families that I'm working with right now that are buying homes, those 4 families that I'm mentioning right now are actually in contract with new construction. Yeah. And in the case of one of them, that loan officer was with D.R. Horton, DHI, essentially. Yeah. And they locked that loan like boom. I mean, it was the fastest time I'd ever seen somebody lock, was like just over a 70-day lock from the time that it's going to be built, because it was already in the process. Yeah. So I was really amused with how fast that loan officer moved. And it was good that she did at that time, because that was when the mortgage rates went up. We were talking, they went up to like 5% on that Friday. Yep. And they've settled back down at like 4.25 until they start simmering down to where you're giving us today's mortgage rates updates. Yep. That depending on the loan and stuff, you could go 2.75 on an interest rate reduction loan for a VA, or 3.25, 3.5, 3.75, depending on the credit score and stuff. So yeah. I think that's really interesting. And Ben, please check in with your loan officer at the new builder. Harrah, are you working or have any knowledge of what the new builders are doing in Atlanta in this case?
I apologize. I'm not working with any buyers that are buying new construction at the moment.
Okay, so. Not a problem. It's not a problem. Thank you. Any updates are always good updates, and it is what it is, right? So thank you for that. Megorium says, we ain't about to miss our mortgage payments if we can help it. Megorium, I'm right there with you, and that's exactly what Bill said, and that's exactly what we've been consistent about with the mortgage forbearance. If you can make your mortgage payments, make them. Because at some point in time, whether it's 3 months, 6 months, 12 months, whether it ends up getting tacked onto the backside of your loan, that piper is coming due to be paid. So as long as you can make it, and that's the smartest thing you can do. So thank you for that. Bijou says, closed yesterday, waiting for a key from California. Congratulations, Bijou. Very, very excited for you closing. That's great. And Bill is chiming at me over here on private notes, by the way. I see your private chats, Bill. He's like, hey, dude, I got to jump off at 9:30 in a few minutes because I got to get on that guideline meeting so you can give us those nice, fresh updates come Monday. So, Bill, thank you for joining in, and I really appreciate you coming on with the time that you have. We'll look forward to having you back on Monday. Harrah and I'll take it in here and answer the rest of the questions that are coming in today. So, Bill, thanks so much for tuning in.
Appreciate it as always, man.
All right. We'll see you again soon, my friend.
Thanks, guys.
Bye, Bill.
All right. All right. Let's get, there he goes. I think we're getting Bill off the screen-ish. Okay. So, Drew's Enthused, thank you for being here, and good morning to you as well. It's great to have you. I am getting your comments, and I did get a lot of comments from, obviously, Monday's post. We had some serious audio interference. Hence, it was a big recommendation that said, Andrew, get some headphones and put them on, dude. It'll help. And then work on getting your guests to do the same. So Bill's going to definitely get a set of headphones that he can wear next time. And for everybody else that has them, I think we can limit the audio interference by at least 2 or 3 parties having the headset. So I really appreciate, by the way, all of the support on that video. That was an amazing live stream with Angie Cole out of North Carolina, and it was just a shame that we had so many audio issues. And today, fortunately, we don't have them with Miss Harrah Brown. Yay. So Pug Love in April, here we go. Now we're going to start getting deep, and I appreciate you and this question because I think it's a very important question to raise. So Pug Love in April is saying, is there a possibility that if there's a large group of people that take the 3 to 6 months of forbearance and they end up with this large balloon payment, that we could see a housing crisis? So, Harrah, what is your thought?
I think, first of all, I think that's a great question, and it's a smart question. I think that because we had the recession and the challenges in 2008, I think that our lending situations, I think they're going to try and do things a little differently, so that we can keep the economy going, keep the housing market going, and keep things strong so that we can avoid a major crisis. We've been there once, and hopefully we've learned from it.
I think that's a good point. So Pug Love in April, the reason I said this gets deep is because, I'm kind of a nerd. And I follow things, and anybody that's watched any of my housing market predictions videos on January 1, since I believe it's 2016, 2017 that I started that, knows I go really deep. And when we're talking about going really deep and specific, Pug Love in April, it's important to understand what the marketplace looked like in 2008 and what led up to it. There were such things as stated income, stated asset loans, no income, no asset verification. You had everybody that was trying to buy multiple properties, speculating in the real estate market to sell. They kept thinking that, if I hold this property for 6 months, I'm going to make $100,000, and it was greed. So it was greed across the board, from the consumer behavior and activity to also corporations' activity and behavior. People say predatory loans. Well, at the end of the day, you either knew that you could afford that or you didn't. And I was getting hit up. I was very much active duty back then, and I was stateside during that time frame in San Diego. And loan officers were like, hey, we can get you $1 million house, and, you won't have to pay anything but the interest for 5 years. They were doing those 5-to-1 adjustable rate mortgages, still a thing, by the way, but there's certain tactics to apply them wisely. But that said, they were like, hey, it doesn't matter what you earn. As long as you have I think it was a really stupid low credit score too, like 440. Then we can approve you. And I was like, how much would a mortgage payment on $1 million be for a VA home loan, being that it's a 0 down home loan? And they're like, so it'd be like $11,000 a month. I was like, excuse me? I said, $11,000 a month? I said, you do realize that I earn, maybe with all my benefits, everything considered in the military, I think it's like $5,700 a month at the time. I mean, I was doing well for active duty, but I'd been in for 9 years as well. So, I mean, ranking up and everything. But the point being is, even with all the benefits, right? I couldn't have paid that mortgage. I was like, that doesn't even make sense. I said, why would you be trying to go after? Now, that part was predatory. But the people that said, hey, yeah, you know what? I'll do it because in 6 months, I'm going to be able to sell this. I'm going to cash out. This is going to be my thing, right? So it's important that if we're going to call a spade, we got to call that spade exactly what it is and recognize the spade for what it is. So what happened, Pug Love in April after the collapse? And this is where the kicker comes in, right? The kicker comes in is when President Obama came to office, and then you have all of these different procedures taking place in the wake of the recession, they want to call it the Great Recession, and frankly, it's a depression. It was a depression. I mean, call it what it is. At the end of the day, the other thing and the reason I mentioned President Obama here is because you had him working with Congressman Dodd and Congressman Frank, okay? And when we were looking at this Dodd-Frank bill, right? Dodd-Frank, and I believe it was 2012 is when they passed this legislation. 2012 is when I think it was. So when they passed this legislation, what they did is they created this entity called the CFPB, which stands for Consumer Financial Protection Bureau. And by product of that, they started tightening the lending guidelines across the board from not only mortgages, but also to how credit card companies operated in anything lending related, essentially. And they started coming up with these notions of truth in lending. And they started coming up with these notions that we need to show people what the consequence of taking out a certain loan is on an amortized schedule, how long it would take you to pay off credit card debt. And we also need to make sure that we're measuring and weighing would-be home buyers across the board with something called income, asset, credit, and employment verification, and implementing something called debt-to-income ratios. And the reason I mention these specific things is that debt-to-income ratios are essentially, you can't go beyond a certain percentage of your gross income with your proposed monthly mortgage and your total debt load. And in some cases, they're as high as 50%. A lot of cases are like 45% or so for a conventional loan, but you can go to 50, sometimes 55% with mitigating circumstances for a federally insured loan like VA or FHA, right? So it's important to take stock of that situation. So how does that come into now with your question with mortgage forbearance and where we are with COVID and the stock market and everything else? I've been saying again and again, COVID-19 is not strong enough to kick out the real estate market. It's just not. The stock market's not strong enough to kick out the real estate market. Sorry, just not. So what is strong enough to kick out the real estate market? Job security, employment numbers. And I promise you this, Pug Love in April, and you can quote me as much as you want, or anybody can that's watching right now. If people start going like a fraction, let's say that 15, 20% of the American population goes unemployed for 6 months or 8 months or greater, the last thing on anyone's mind is real estate. And it wasn't real estate that just got hit. It was everybody across the board that just got hit. And that would be a 2008 situation. So when you're asking me by crisis, you mean we end up with foreclosures like we saw during the Great Recession or Depression, in my humble opinion, right? No, I don't believe that's going to happen. Do I believe there's going to be an uptick? Yes, I do. And I'll explain why on both of those points, okay? I think that for people that probably purchased their homes in the last 12 to 18 months that do end up losing their job, that do end up writing out mortgage forbearance, depending on how the mortgage forbearance is implemented at the end of the day, whether it's a 3-month, 6-month, 12-month, or greater repayment, I think those people might be in foreclosure territory. And I use the word might very loosely in this case. And the reason being is what happens if their home also appreciated it to a point that they could move into a short sale territory with the bank, or perhaps just sell it outright and have, if they had some money that they were able to come to the closing table with, then they could actually avoid the process all to begin with. So, but if they're not, and they're not able to get the short sale process, that's where I think you'll start seeing some of the foreclosure proceedings. But given the uniqueness of COVID-19, I also visualize a situation, and I was talking with my broker here, Ryan King at King Realty Group, about this because he was around in 2008 and did a lot of distressed property sales. And one of the things that I was listening to his insights and wisdom on is he's like, look, even whenever a default goes out, and by the way, that happens after you miss 3 mortgage payments. That's what kicks off a notice of default and initiates essentially a foreclosure proceeding. Okay. He said, then there's going to probably be a lot of mediation. And when you're looking at a lot of the mediation situations taking place out there, he said, I don't know that everybody that the bank set out to foreclose are going to get foreclosed on. So I said, well, let's back this. If right now in Las Vegas, Nevada, and I use my marketplace because obviously I know my stats in my market, just as Harrah knows the stats in Atlanta. And I say, if by a fraction of the market of all the homes that sold in the last 12 months, roughly 1.5% on the highest as high were considered distressed property sales of all homes that sold, which for reference was 60,000 homes in 2019 that sold in Las Vegas, and only 1.5%. Now, when I compared that to when I got into real estate back in late 2013, oh my God, Las Vegas was like 55 to 60% of distressed sales. I was cutting my teeth as a brand new agent, learning the foreclosure process and short sale territory on the listing and buy sides, because that's what our market was dominated by. And you couldn't, walk outside without running into a short sale or a foreclosure back then. And then it started recovering, and it's gradually reduced down towards right around 1.5%. So I said, Ryan, let's brass tack this to the real estate market. What do you think on the highest of the high from your experiences? Do you think we would see a percentage of our market go to distressed property sales? And he says to me, he said, Andrew, I think it's being blown out of proportion, frankly. And I think that it will go up. It might double. I said, you're talking about 3%. He said, that's a very it might, don't really see it, kind of might, but it might, right? So when we talk about total market volatility and you talk about total market stability, you have to look at those distressed property sales. And that's why I think it's such a great question, why I shared with you, this gets deep pretty quick. You have to understand everything that has become before now, where we are now, and where it looks like we're going with legislative changes and the way that things are going to be handled in this situation with mortgages and the real estate market at large, okay? And the reason being is that when we can take a look at everything in its totality, we can take that breath, we can reassess, then at that point, and only at that point, can we bring it into true context of what that means and how it looks like this is going to get applied. And that's one of the reasons that I've been going live. This is the 4th week of going live since this stuff kicked off 3 times a week. Is stuff moves so fast. Okay. So we have Bill on with us as a loan officer, fabulous agents like Harrah joining us from Atlanta, Georgia today, and other agents from around the country that'll be coming on and have already come on for perspective's sake to gain other professionals' insights. Okay. So when we look at everything, that's why we do these live streams, is so that we can keep you up to date. And if, honest to God, if I thought the market was going off the deep end tomorrow, I'd be popping up really quick. Hey, market's crashing. It's going to crash in T-minus 90 days. Make sure that you batten down the hatches and whatever, right? If I saw that read on the market, I promise you, I would tell you, because my goal as a trusted real estate advisor is to ensure nobody gets hurt in as much as possible. And I think that real estate practitioners like myself and Harrah owe it to everybody to essentially have a form of a Hippocratic oath in real estate that is to do no harm to anybody, and to always put hashtag people first, right? People before profit, and make sure that we're focusing on clients and giving them the best information possible to make a well-informed decision that's right for them based upon the reasons that are important to them. So in short, do I think that we're going to see a lot of these issues arising? No. I know there's a lot of confusion out there. I know there's a lot of other YouTubers out there. I know there's other real estate practitioners, lender practitioners, and all these different people trying to essentially use clickbait, frankly, to get the views or get the engagement, and then try to turn around a lot of them and say, hey, you know what? If you buy my training for like $99 a month, I will teach you how to take advantage of the market. If you buy my training for $1,000 a month, I'll teach you how to become a millionaire tomorrow. And if you buy my $10,000 package, oh my God, you'll get VIP treatment. Who's that really about? Is that really about the person? Or is it really about the person that's making it, as opposed to the person that matters the most in the situation, which is you? And I think that's what's important to take stock of as we assess a situation in its totality and bring it into its true and refined context. So I really love that question, and it has come up in one form or another about the housing market every single live stream. And I think it'll keep coming up, and I think that it should come up. And I think that's why we have this conversation. And I think that's why, in fact, I know that's my biggest reason why I'm going live and just trying to help. So thank you for that. Megorium says, love ya. Megorium, love ya too. Tish R, it's good to see you, Tish. It is so awesome. And I'm glad that you did catch a lot. It's been a while, my friend. and super excited that you were just live. Thank you so much for your support, my friend. Kyle Walker is back. Kyle, you've been jumping on a lot of live streams too, and thank you so much for doing that. So Kyle says, good morning. We're supposed to close on our first home this week. We are still waiting on the lender to secure a mortgage commitment for FHA. Or what to tell the sellers. Suggestions. The truth. Tell them the truth. Get with your buyer agent. Make your lender's contact information available to the listing agent and the seller and say, hey, this is where we're at right now. We're working on trying to close on this house. Right now, this is where we're at in the process. We're waiting on the lender to get the mortgage commitment letter from the FHA. And it is what it is. We may or may not need an extension depending on what actually happens with the loan officer. But in practice, Kyle, every negotiation I've done in 170 transactions in the last 6.5 years, right? Truth is the best policy. Letting people know where they're at and what's going on is the best practice every day of the week, all the time. And here's why. If we think about people, we as people are really interesting critters, aren't we? People, call us what you will, right? You're just interesting, right? People I have found, and anyone out there could correct me if I'm mistaken. Harrah, please feel free to jump on me if I'm wrong here. I have learned and I have found that people do like absolutely wonderful with good news. I have found that people do okay with bad news, or if it's news that they didn't anticipate, so long as they know about it. But I have also concluded that the third part of that is people do absolutely pathetically awful. They get mean, they get nasty, they get angry, they don't trust you if they get no news. So how does that apply in the art of real estate negotiation? It applies by being honest. This isn't your fault, Kyle, that your lender hasn't got the mortgage commitment letter from the FHA, and it may not even be your loan officer's fault because of the reduced staffing and across the board right now with the COVID-19 situation, right? It could be a time delay. And this is why it's important to take that breath, hashtag JTAB, just take a breath, reassess the situation. This is what we're at, where we are. This is what we're doing. Here's my lender's contact information. If you want to reach out to Mr. and Mrs. Listing Agent or Mr. and Mrs. Home Seller, please feel free to do it. But we might need an extension if this is unable to get it by this date. We're trying. And being that today is Wednesday, I don't know. We buffered out there for a moment. Are we back? I don't know what that was. So I hope that you heard what I was saying there with your closing disclosure. After you get your closing disclosure, you got 3 days that you have to wait by law before you can close. So it is a situation, Kyle, that you should absolutely be having a conversation with your buyer's agent, your title officer, and also, most importantly here, your loan officer, and get them dialed in. Megorium says, congrats, Bijou. Oh, Megorium, you're always so positive, Mojo. Awesome, awesome. So Ben Provis says, thanks for the info, guys. Yes, my officer says she can do a 30-day lock, or if anything changes on the 60 days, she'll let me know, but I will continue to reach out to her. I don't want to miss the good rates. And everyone, if you're just joining us now, thank you for being here. And also to Ben's point, he was mentioning that he was in contract with a new home construction and saying that he wasn't being provided just yet a 60-day rate lock. And Bill was answering those questions if you want to back up the stream a bit or watch it after we're live. Ben then says, thanks very much, Bill. I'll speak for Bill on this, and Bill would say, you're very welcome, and we're glad that we could help. Drew's Enthused gave a thumbs up. Lynn Brown, 38, says, thank you, Andrew, for the awesome videos and education in real estate. Looking forward to purchasing in the third or fourth quarter in Queens, New York. I love your honesty. And thank you so much, Lynn. I think it's really about sharing what we're doing here with Harrah and the other agents and Bill Marin and getting this live stream known for what it is, the truth and the reality. And the more of you that feel so inclined to like share it on your social media or let people know, the better off it's going to be. And the more people that can find it and the more balance I think we can put into the market with reality. So people know where we are, what it looks like is coming, and they'll know how to pivot and adjust so they're not on the spot, like trying to, it feels like an emergency. And just for reference, the reason that comes to my mind is in the Marine Corps, right? I was a Marine for like my other life, right? For all of my 20s and late teens, essentially. And the reason I reference that is the Marine Corps is really big on training you for real world combat situations, training you hard, right? Absolutely hard. I mean, I look back on some of the stuff we did, and I was like, I don't know that I could do that anymore. I'm almost 40 years old at this point, and I think I'd get hurt. But back in the day, when I was in like immaculate shape, I was like 192 pounds and 6% body fat, running like, a mile in like 5 minutes and being able to hold that pace for like a long time, for miles and miles. But the point that I'm making here is the Marine Corps believed in training. So how does that pertain to a civilian in the United States? How does that pertain to where we are with COVID? We have to assess the situation. We have a clear and present danger in this country known as COVID-19. We know that this virus can kill, and it will kill. We know this virus is indiscriminate of any socioeconomic strata, any state line, any boundary. It doesn't care because it's a virus, right? So what happens here? We know that the best offense is a great defense. And part of the defensive measure, number one, is personal hygiene, staying clean, doing the hashtag stay home movement if you can, and working from home if you're able, and limiting exposure through social distancing at this time. If we keep our is making sure that we then look at what we can do to support our first responders by getting out of their way and making sure that we're supporting them, and that we come together not only in this hour and time of need in our country, but we stay together long afterwards, and we bring as much love, joy, and hope to everybody that we possibly can by supporting them and helping them, and especially focusing on those that need the help. There are certainly people that are hurting, that are bears with truth, love, and positivity. That's what I really think this is about. And that's what the balance is that I'm looking to try to provide. Again, maybe if I was a fear monger that, or a salacious thing, paid and millions of subscribers or whatever, integrity won't allow it. So at the end of the day, I have to live with myself. And if I can't put my head on your conscience, then I've done something wrong. So that's just where I stand, and that's just a view of human, as somebody that's been through a lot of crap in his life and have been bankrupt in my life. I have been in a combat zone. I have had to try to find pennies on the street and quarters on the street to put gas in my car. I know what it's like to be hungry. I know what it's like to be thirsty. I know these things because I've lived these things. So I really feel for people that are in those situations. I know what it's like. And I want you to know there's a way out if we come together to one of love, joy, and hope. And that's something that each of us can do. So that's like big sense on that. But Lynn, thank you. You have a...
I'm sorry, I think we cut out a little bit.
I said, do you have any thoughts about what I was just saying about the overall situation and how best to help people out?
I think communication and honesty and education are the most important things right now. I think communication, because we are in an isolated type of stay-at-home environment, I think doing shows like you're doing, Andrew, educating the public is huge. And so I think education and communication and talking with each other, because I think when people are too isolated and they don't get enough input, then I think that's where the fear starts to come in. So that's why I'm so excited to be a part of your show and being able to share in a truthful manner from our perspectives what we see going on in the market. And I think education is power, for sure.
Knowledge is power. You're absolutely right. And thank you for that. Carmen Chong, I popped you up real quick, but then we were talking about something else. Now I'm popping you. Carmen Chong says, thank you for being here. Carmen said, Andrew, I enjoy your live YouTube sessions. I will see Javier Vidana for your discussions. He's a very knowledgeable realtor and YouTuber in the Arizona market with 24,000 subscribers. I know Javier and who he is extremely well, my friend. So Carmen, if you ask Javier, I actually invite him on to the first week of live streams, 2 weeks or a week and a half in advance. Let him know what I was doing. There was a video that I made of caught with another YouTube great agent out of Arlington, Virginia, Matt Layton. And I had invited Javier to join us on that. Now, I think Javier has things going on that were like life related. And I said, hey, if you want to come on, just let me know. I'm happy to have you. Essentially just sharing the truth and putting calm into the world by virtue of knowledge is power and education. Look, are we in a bad situation? Sure. Let's call it what it is. But now that we recognize that, let's talk about how we move forward with the solution instead of being part of the problem and running around in hysterics, right? So that's kind of where I was hoping. I really, really, really hoped, in fact, to get Javier and Matt together with me, because we are the three biggest YouTubers out there for real estate related content as it pertains to consumer education. And I remember when Javier started, I was the one that picked up the phone and called him. I was the one that picked up the phone and called Mr. Matt Layton, because I said, look, we're always hashtag stronger and better together than we are not. That's just my view, stronger and better. This is about helping you, the consumer. This is about helping educate people. And this is about helping people. I don't look at anybody as YouTube competition or real estate competition. The only competition Andrew Finney has at the end of the day is Andrew Finney. And I know that I do the best that I can, and I strive to improve. So to your point, I asked Javier to come on. And if he wishes to come on, it's very simple. All he's got to do is let me know. I left him an open-ended invitation. And I'm happy to see that his YouTube channel, you're telling me 24,000. I remember whenever I first reached out to him, it was like Matt Layton was #1, I was #2, and Javier was just getting up and going. So I think back in the day, this goes back like 2.5 years ago, maybe 3. I think it was like 2.5 though. I think Matt was like 6,000 subscribers, and I was like all excited. I had like 4,000 subscribers, and Javier was coming up with like 1,100 subscribers. And I was like, oh my God, this is amazing, right? And I was super stoked and excited. And I was like, oh, I got to call these guys. They got some great content, and I love their points of view. And everybody clicks with different people. But the most important thing I could think of is let's have like what's called a infinite mindset, and give it all that we got to help people, knowing that some people are going to click with Matt better. Some people are going to click with Javier better. Some people are going to click with me better. It is what it is, right? Because we're all people. You have people that you like and that you follow. So, if I know that Javier goes live from time to time, why don't you jump on his channel, Carmen, when he's live in it? Just let him know we had this conversation, and you can point right over and send him a link to this live stream and let him know if he wants to join us. I'm happy to have him join us. So that's just my thought on that. And yeah, he's been kicking some butt with his YouTube growth strategy, and I'm certainly happy for him. YouTube is definitely a science. And he and I both, and I'll go ahead and plug it right here, right now, are going through, or he has probably already done it. It's a course called Video Ranking Academy by Sean Connell. And I would like to plug that at Sean Connell for the specific reason that if you're a YouTuber or you want to get into YouTube, or you're just getting started and don't know where to get started, Sean Connell, Think Media is the bomb. I learned more in one single course than I've ever learned in making over 600 videos in 4 years. I learned more in one course with Sean Connell than I ever knew possible. And that's just the reality. So I know that he's following those strategies and implementing those strategies. And right now I'm newer to the Video Ranking Academy with Sean Connell. So I've only been doing it for about a month or so. But there's definitely some big changes that are going to be headed out. And hopefully I can catch up to Mr. Javier, and we'll just keep rising together, stronger and better together than we are not, right? Anyways, Carmen, thanks for calling out Javier. And hopefully Javier will join us. That would be great. Meseret Binti. Let's see. Meseret Binti says, good morning. Good morning, Meseret, and thank you for being here. Megorium says, Trump halted foreclosures and evictions till the end of April, right? But I've heard the virus can affect our country up till August. Wonder if Trump can extend the time frame for that long. It's not Trump, Megorium, that's doing that. That's Congress. That's the House that is pushing that. In reality, if you look at the legislative measures that were being passed, it was Congresswoman Pelosi and a lot of different people that were going after that to implement those strategies so that they couldn't be foreclosed or evicted in that situation. Do I know if they can extend it out that long? I don't know. Ideally, hopefully we're able to get a wrap on this. I think that's where you have Governor Cuomo in New York and Governor Newsom in California, and even our governor here in Nevada, Sisolak, and a lot of governors around the country that are weighing very carefully the return to work of a lot of people and what industries to open up and how to do it in a strategic way. And I think that's good to get people back to work that are have to be on location to earn an income. I think that's a smart idea. But I also think the better part of that idea is being cautious about it to limit the risk of possible further infections. If you open up too quick, like Dr. Fauci has said, if you open up too quick, it could be a really bad thing. So that said, let's come together. Let's think this through. Let's make sure that we're writing our Congress people, calling our Congress people, expressing our concerns, because we, the people, are, again, stronger and better together than we are not. So I don't know at the end of the day, Megorium, but thank you for that. Megorium said right after that, I haven't read any updated articles on that issue, nor have I, but we're going live 3 days a week. So as we learn more, I'll make sure that we mention it, Megorium. Shabana Khatun says, thanks much, Andrew. I have learned more about real estate and home buying tips and tricks from your videos in the last month than I did in my entire life. Well, Shabana, thank you. I appreciate it. So hopefully you're inspiring Miss Harrah over there to get onto YouTube and start making some consumer content to help out the people she represents over there in Atlanta. It'd be great to see you on camera more often. You're doing great right now.
That's how we hooked up. So I think it's very exciting, not only to have an opportunity to teach and share information and knowledge, but to connect with the people in your community and with people and other great agents like yourself who are YouTubers. So it's a win-win for everybody.
Right. It just comes down to building a community online. And that, to me, that's what YouTube is about. And, 18,500 people and growing on my channel. It's a community. We're a community. We're a team. We're a partnership. The way I look at it, everybody keeps me on my toes and helps me keep pushing myself to learn and grow. Like Monday, the bad audio level. And I apologize to people and let everyone know, hey, I don't know what went wrong. And some really nice people had commented, hey, Andrew, so it's okay. Get yourself a headset, put it on the next time you're live, and make sure that you only have one device and preferably far away from where you are around you so that you don't have that problem. And I didn't know. So, I learn and grow every day too. And it's the community that helps support me. And I, in turn, am happy to support them in answering the questions that are important to them. So yeah, I think it's beautiful, and we love to see your channel as you grow and everything else, and follow you too. So that would be awesome. And Shabana, thank you so much for your kind words. It really does inspire me to keep going, because after 600 videos, my friend, I get tired. I'm just being honest. But at the same time, it gives me energy whenever I know it's making differences in people's life. So that's why I do what I do. And thank you for letting me know how it's affected you. Jaji says, do you guys have any thoughts on how evictions or forbearance will affect the market for multifamily homes, although not owners have debt on their family homes? I think that's a great point. Do you know anything about that as it pertains to Atlanta, or?
I don't have a specific answer for that, but I think that, honestly, I think that I really feel we're going to be okay through this. I don't think that the banks and the mortgage companies, I don't think they're looking to foreclose on and to do short sales. Just like everything has been put on hold, I think that their normal procedures will also be put on hold. So I am still optimistic as far as how this is all going to unfold.
That's a good point. So, Jaji, I have a few different thoughts on evictions or forbearance. Well, obviously, if you're the owner of such a property and you need a forbearance, then it'll be interesting to see what guidelines shape up and if they'll be extended into multifamily properties, because going back to what Bill was saying earlier, it should really be for people that need it the most. And I think those funds or that process should realistically be used first and foremost for primary homeowners of their actual primary home. That's where I think we need to focus on, number one. And then number two, we could start taking a look at landlords and multifamily properties. Now, when you're talking about a multifamily home, obviously, in most cases, you're renting that out. It's an investment. It's something that you should have been planning for a rainy day on, by virtue of, if you were earning $1,000 a unit on a fourplex, let's say that's $4,000 a month. Let's say operating costs were $2,500 a month. That was $1,500 before taxes. Take the deductions that you can get as a real estate investor landlord situation, right? And make sure that you're able to at least save, ideally, $500 a month on that for a future rainy day. Now, that's the prudence that goes through my head as far as fiscal planning as a landlord and as somebody moving forward to make sure that you can cover not only if you have a vacancy rate going on or lapse in rental income, but also for the maintenance of the property to make sure that if you need to change the roof, if you need to paint it, if you need to update it, whatever the case may be, you have the money on hand as an investor to go in and take care of it. Ultimately, at the end of the day, when you're talking about evictions, do you really want to make anyone homeless? I mean, obviously you want your money. And this is where it comes down to there's two sides of a coin every time. You have the side of the coin where people are becoming more aware of mortgage forbearance and eviction status right now